Good morning, trading world. It is October 24th, 2022, and this is my pre-market outlook for trading the markets. The title for this morning's outlook: Don't get rallied to sleep. We are finally getting some of the things that I've been looking for, and one of those things is a violent rally in which volatility continues to pick up. That in itself should be a sign to let you know things are not right, and don't trust the rally itself. I have been targeting the 25th and or 26th as the area for the next wild ride. Most people don't understand or pay attention to what consolidation is and the different levels of consolidation. Now, I've touched on this before using the analogy of the market being a runner in a marathon. Let's revisit that. Now, a runner covers distance, and eventually they get tired and the runner slows. Still trying to push forward, but the energy just isn't there. And they start to look and hope for one of those water break areas along the route. When the runner reaches the water break area, they don't stop running, but they tend to almost run in place. The runner uses the time running in place to replenish fluids and energy to begin the next leg of the run. Now let's look at this in the context of the market. A runner covers distance running, and eventually they get tired and the runner slows. So in the case of a runner, in the case of the market trends in a direction, uptrend, and then gets tired, trying to push on, but there's just no energy. When the runner reaches the water break area, they don't stop running, but they tend to almost run in place. When the market reaches a decision area, this is what I like to call support and resistance, it goes range bound. Down and then up in a range, trading sideways. The runner uses the time running in place to replenish fluids and energy to begin the next leg of the run. Now, in the market's case, the market uses the range-bound trade to replenish buyers or sellers and continue the next trend. Will that be up or will that be down? Now, what loses and confuses most traders is the understanding and timing between the multiple levels that this happens at the same time. The market is what's called a fractal. No matter what magnification you slice it down to, it all looks the same. Same patterns, just different magnifications. Now, the scary part of this is that at some point the bond market is going to get tired of running, or let's say trending to the downside, and consolidate and possibly reverse its trend. And when that does happen, I believe the equity market will suffer supremely. Think about it. In order for the bond market to reverse, there will need to be new money to buy bonds. Where will that money come from? My guess is the equity market, causing another sell-off. That's my diatribe for the morning. Let's get to the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 376 to the 377 area. Then we have our queen resistance, 378 to the 379 area. This is going to be an area of contention today, trying to push through that, and we may get that peak through, pushing just up above before we reverse. Then we have our king resistance level, 380 to the 384 area. On the support side, we have our jack support at 372 to the 371 area. We have our queen support, 370 to the 369 area. And then our king support, 368 to the 366 area. The main thesis for today is bearish, closing below the 374.29 with a projected target low of between 373 and 363. The alternate thesis is bullish, closing above the 374.29 with a projected target high of between 374 and 384. The current major channel we are in is 364 up to 379. The major channel above that is 379 up to 397. We do have harmony between the technical side, which is bearish, and the quant side, which is bearish. Market strength and order flow were pushing its upward limits when we closed Friday, but I am sure the pullbacks overnight may have given us the slightest bit of room to continue up briefly. The weekly outlook has a small bullish bias, closing above the 374.29 with a possible retracement of 366. The monthly outlook is bullish as well, with a possible retracement up near that 394 area. So those are the kind of short and mid-term goals or areas to kind of keep in mind when it comes to the weekly and monthly outlooks. Let's bring up the scenarios of the day. All right, here we are back with our first scenario, which is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area, find midday chop around either the queen or king resistance before spending the same energy we used going up to come back down the second half of the day. I do want to touch on the vice versa alert, which could have us do pretty much the opposite, which would be to continue lower out of the cash open, find support around either the jack or queen support level. We'll find that midday chop around that jack or queen support level. And then spend the second half of the day going back up with the same force that we came down with the first part of the day. So that's the vice versa alert for our rounded reversal day type structure. All right, here we are with our second scenario of the day, which is going to be our trend day up, which would have us open gap up and start with a, give me just a moment to correct that, should be a fade back toward the previous close. All right, once we get that fade back toward the previous close, we find support on or before the previous close, then begin the uptrend for the day. We find midday chop around either the possible queen or king resistance level, and usually the second part of the day we get kind of a head fake that looks to continue the main trend of the morning, but at some point we get kind of a fade back into the close or near the close. So that's our trend day up scenario. And here we are with the last scenario, which is going to be our expanded range day structure. We could have an initial drop lower, find support, chop back and forth before grinding back to the upside for the day, and then kind of leveling out. So the expanded range day is probably going to have a bearish tilt or bearish bias to it. So be prepared for that. So those are the day structures on that I'll be preparing for today. The ideal day is that we get all the way up to the 384 area. That is where my ideal short would be. But what's more than likely going to happen is that I will fan positions out starting today, going tomorrow, in preparation for the short that I said, or anticipation of the short that I said on the 25th and 26th. So we're going to look for these rallies today to kind of start fanning into positions. As always, you need to understand that the most important job as a trader is protecting the capital that you already have. And we do this by knowing and understanding the risk that we put on in each position, and we manage that risk in accordance to our account size. I hope this helps. As always, wishing you a positive trading day. Let's go out and have a great one.